In Nigeria, after 4 consecutive sessions of losses this week, the equity market appreciated 172 basis points on Thursday, rounding off the holiday-shortened week by 8 basis points in terms of week-to-date performance. In terms of sectoral performances, the industrial goods sector ended 398 basis points lower after declines in CCNN and WAPCO on Thursday, erasing the gains that the Dangote Cement had brought into the market in the previous session. The banking sector ended in green on Thursday also by 171 basis points, but came in negative on a week-on-week basis. If you look at the consumer goods sector, the oil and gas sector, and the insurance sectors, the numbers on the screen represent what we have in terms of performance right there. So let's move on now and see what we talked about, which is supposed to be our focus as well in terms of the launching. We had this year starting on a positive note and ending on a similarly positive note in terms of the first quarter of the year analysis and evaluations. Joining us to discuss this right now is Shina Olubu, who is the head of research at GDL Asset Management Limited. Shina, thanks a great deal for coming through on the program.
Thanks for having me, Sembo.
So let's look at January, February, March. March 31st, we have the privilege of discussing what's transpired in the market. Let's start off with equity. What did you see?
You know, the equities market started the year as though we're going to have... first, it started as though we're still in the mood of Christmas and New Year. Mm-hmm. The market began very, very bullish, and then with a lot of people coming to the market, a lot of investors coming to the market, a lot of people, foreign investors coming to the market, which triggered activities within and amongst the local players. Yeah. So pretty much we had in the first few days of the market, especially in January, so the market moving as the year-to-date gain going as high as 17%. For the January ended the month ended with 15.99%, just within say 15 or 16 trading sessions. So that's to tell you how bullish the market was in the early days of the year. However, we saw on account of some profit taking and say price corrections here and there, we saw that in February the market lost about 2.2 something as against the 15% that we saw moderation in the year-to-date gain. And of course, something similar also happened in March. For March was worse. We saw for March the market losing about 4 point something percent. So that brought the year-to-date overall from the as high as 17% that it was in January, sometime in January, to about 8.553. So as we speak now, the profit of the market year to date is around 8.53%. So we have seen a lot more profit taking, price corrections here and there. So it's a bit of I won't call that roller coaster ride. It was a bit of bullish sentiment at the beginning of the year, and then of course we saw profit taking and price corrections over the years.
That was the bullish sentiment that actually ranked the Nigerian market the top most in terms of global performance and all that. Yeah, are we still on that position? Are we still retaining that ranking?
I doubt we are. I doubt we are. You know, we ended last year, 2017, on a very, very bullish note, and of course it was 42.3%. So we saw like the overrun, or should I say spillover effect of that into the year, so 2018. So it wasn't too surprising that we saw that we were on that trajectory even as the year began. So that was all what happened.
Okay, so there were also several news. We had of so many investors coming in, foreign investors, Milos putting money in Unity Bank, in Resort Savings and Loans, in Japol and all that. Yeah. You know, so how did that shape things in the market? Okay, because a lot of the prices of a lot of these companies, except for Resort Savings and Loans, actually ticked higher.
Yeah. I mean, I was going to mention that some of the laggards, apart from the fact that some people were okay with the profit that they are made. Some other factors accounted for why we saw moderation in the performance of the markets, and some of those moderation was disappointment of the investors in terms of the corporate declarations of the company. So some of the rally we saw, I mean, the sense I got was that some of the investors had priced in some expectations into the bets they were taking on some of these tickers. So by the time those results were released, they probably felt disappointed that, okay, for some stocks that they had expected that would have some improvement in their top line and bottom line, probably they didn't see the kind of growth that they had expected. So as a result, the kind of rally you're supposed to see, you did not see. That's on the one hand. The second, on the other hand, talking about the inflow of some investors, so it's been neither here nor there. For Japan, we saw Japan moved from about 30 something kobo to as high as 1 naira and 6 kobo. So there were some news to counter the initial news that we had.
Because, like we know, the Unity Bank, for example, breaks the market during the course of this week.
There was even a rejoinder initially. And of course, they now had a full to say that, there are discussions ongoing. There was one release I released. I said that they have discussions that are ongoing, that nothing concrete has been achieved. Agreed.
Let's move on before we go to the break. So bonds and T-bills. There were some auctions at the point, that's auctions for bonds, external, listings and all that. Tell us more for this first quarter.
You mean for bonds? For bonds. Well, for bonds, the kind of rally that I thought we'll see in the fixed income space generally, both for bonds and T-bills, we did not see, because we saw for bonds, we saw for the external borrowings, because you remember that in 2000, for the most part of 2017, we saw very high yields on T-bills,
especially the 364
days. You see the rate. Oh, you want me to hold my thoughts?
Yeah, exactly, because we actually need to go on break before we get to pay some of those bills. So after this break, we will continue the discussion around treasury bills and bonds, and then look at the outlook for the second quarter of the year.